Live from Dubai today, this is Bloomberg Daybreak Europe. I'm Joanna Bersecci with your top stories. Oil and gas surge while stock futures fall as U.S.-Iran tensions escalate and the standoff in the Strait of Hormuz continues. The U.S. Navy boards an Iranian-flagged cargo ship with the key waterway remaining shut. Iran unveils a new transit fee. Diplomacy on the brink. Iran says it will not join peace talks until the U.S. blockade is lifted. Meanwhile, President Trump dispatches negotiators to Pakistan ahead of tomorrow's ceasefire deadline. Well, with all of the developments in the region over the weekend, the uncertainty about the fate of those negotiations in Islamabad alongside the ongoing standoff on the Strait of Hormuz, this is the setup as we head into the European Open. S&P futures trading very cautiously, down 0.6%. European markets also down 1.2%. Take a good look at some of the price of commodities this morning, having a knock-on effect on European equities as we head into a big earnings week for European markets. And then the FTSE 100 relative outperformer today, down 0.3%. Switching over, I mentioned commodities. Take a look at the price action today. In Brent, we have shot back upwards at one point on Friday. We were down about 12% after reports came out suggesting that the strait had been fully opened. But then as it transpired throughout the course of the weekend, that clearly was not the case. In fact, it is still quite dangerous. And so to account for that, we are seeing an uptick in commodities prices today. Brent up 5.3%, $95 a barrel. European gas futures also up 7% too. Remember, they are trading now in our time zone. So we are seeing this morning a significant uplift in the price of these gas futures. Nat gas in the U.S. also up 1.7%. So a little bit more immune, as you can imagine. But the point is here that commodities once again in focus, given the status of the Strait of Hormuz. Now, in terms of major events to watch out for today, aside from the geopolitics, 7 a.m. UK time, watch out for German PPI. We'll see whether any of these inflationary pressures are beginning to show up in these producer figures. Also, we start off with some of the mining earnings. So watch out for Rio Tinto. That comes out later in the evening. It's around 11:30 p.m. If you're still up, Rio Tinto sales and revenue numbers will be reported. That's for the first quarter. And then later this afternoon, the Wells Fargo CEO will be delivering a speech at the Economic Club of Washington. So see what he has to say about the state of U.S. banking and potentially about the state of the Iran war as well. And those are your risk factors ahead. With that, let's get the show started. Well, oil and gas prices have surged after the U.S. Navy seized an Iranian ship in the Gulf of Oman, escalating tensions as Tehran reimposed controls on the Strait of Hormuz. Iran closed the choke point again on Saturday after it said a U.S. blockade of Iran-linked ships violated a ceasefire agreement that ends Tuesday. President Trump said the U.S. Navy fired on and seized the vessel after it ignored warnings while sailing towards Hormuz, the first major encounter in the week-old blockade. For more, I'm joined by Stephen Shasinski, Bloomberg's energy and commodities reporter. Well, so many questions to ask. But first of all, let me just start off asking you, what is the state of traffic right now in the Strait of Hormuz?
The state of traffic is not a whole lot is happening. So we had been monitoring this over the weekend, and I'll take you step by step what the market saw and what we were seeing as well. You know, on Friday, there was a lot of, views that maybe there would be more traffic going through Hormuz because both on the Iranian side and the Trump administration had said that it's essentially open to traffic. There were some discrepancies then going over the next day as to how much it is open. Trump again reiterated that they would not allow Iranian ships to go through. The Iranian side didn't agree with that view, and there were some disagreements on both sides. Despite a lot of ships going more towards the strait, we saw actually an increase in oil traffic through the strait, likely the highest level on Saturday since the war began. But then that's quite quickly stopped with Iran reimposing their halt on traffic. Ships were hearing an alert through their radio saying that the strait was closed. At the same time, you also had attacks on ships. So essentially all of those vessels pushed back. I was watching LNG ships that were approaching the strait and then did a U-turn or idled on the Persian Gulf side. And then now we're into today with the Trump saying that they seized a ship, an Iranian ship, and now Iran likely looking to respond to that. And the market is watching how will that response play out. So now Hormuz very much shut. You've got oil prices rising a bit, although not really gaining more than the losses from Friday, which does, I think, indicate, at least to a small degree, that the market is hoping or praying that there will be some sort of breakthrough with the talks between Iran and the U.S. if they do happen this week.
Yeah, well, I was just looking at the chart of Brent now. Before the post by the Iranian foreign minister went up suggesting that the strait was open, we were trading at around $98. Then that post came through, and then President Trump was thanking the Iranians for opening up the straits. He went all the way down to almost as low as $86. We are back now to 95. I mean, clearly a tremendous amount of volatility here. What are traders watching out for next, Stephen?
You know, I think the big thing is what's the response from Iran. So that's the first thing. Second, what will happen? Will there actually be talks? Is J.D. Vance, Vice President J.D. Vance, actually going to be going back to Islamabad? Is he going to engage in these talks again? Will the second round of talks actually happen? And then third, if Iran does respond to this, is it going to be them just tightening Hormuz? Because if they do that, it's sort of the situation at the moment. I don't think that's, it's not great for the market, but doesn't really add to that bullish narrative and maybe won't push oil above $100 Brent. But if they start to attack infrastructure, that's where we're potentially going to be rising back to $100, $110 levels, because that's where we were before. Before the ceasefire, there was a lot of fear that Iranian attacks on infrastructure in Saudi Arabia, Iraq, other places could theoretically push prices higher, because you can't just restart those facilities quickly. A repair could take weeks, months, even years, depending on the damage. So if we start to see attacks again on infrastructure, that's when price will rise. We're not at that moment at the moment. We're not there at the moment, but that's something that the market is watching out for.
Bloomberg's energy and commodities reporter Stephen Sachinski, thank you so much. Well, President Donald Trump and Iranian officials have offered disparate views on the next stage of the war, with the ceasefire set to expire in the coming days. Tensions in the war ratcheted up over the weekend, with confusion and confrontation in the Strait of Hormuz. Now, on Sunday, Trump threatened to destroy Iran's power plants and bridges if negotiations fail. I'm joined now by Onur And, Bloomberg's managing editor for the Middle East and North Africa. I guess, the number one question for this week is, are they actually going to meet in Islamabad, the U.S. side with the Iranian side?
It's looking increasingly difficult, if not unlikely, despite President Trump's tweets yesterday that suggested he would send the American delegation led by Steve Witkoff to Islamabad later today, on Monday. We have seen overnight into Monday Iranian state TV reporting that the prospects are not clear, and the main thing that they cited were primarily what they described as excessive U.S. demands, as well as the naval blockade. And as we know, that naval blockade has been the main reason behind the chaos that erupted and unfolded at Hormuz over the weekend. We have seen Iranians roll back their decision to reopen the strait. Less than 24 hours after they they said that they would allow passage of maritime traffic through the waterway. And the bottom line of what they have been saying is that if Iran cannot send its ships through the waterway, then nobody else can.
Yeah, and at the same time, of course, the longer this goes on for, the more the world, the region are going to feel the economic impacts. Of note this morning, the Wall Street Journal reporting that there had been some conversations on the sidelines of the IMF last week between the UAE Central Bank and U.S. Treasury officials with Scott Bessent about the possibility of opening up a swap line should the war continue for longer. I mean, how should we read this? Because we know that the UAE are sitting on hundreds and billions in dollars of reserves.
That's correct. I think what's important to note there is the fact that this was, according to the Wall Street Journal, was a precautionary request, or more like an exploratory conversation between the Emirati officials and Scott Bessent. One thing that they also floated, according to this story, is the idea that the UAE, should the war drag on, if it finds itself in a difficult position, it might consider switching to trading oil in yuan. And that obviously could be treated as a veiled threat by the American officials, because the US dollar enjoys a near monopoly in oil trade, and that's very, very important. The second thing to note is that this conversation took between the UAE Central Bank Governor, apparently, and Scott Bessent, and that leaves unanswered the question of who would be the counterparty to such a transaction. Normally, U.S. Federal Reserve likes to prioritize G10 countries, with some notable exceptions in recent years, for countries that have deep ties to U.S. financial markets. But on the other hand, we know that the U.S. Treasury also has a mechanism that allows it to extend such lifelines in times of necessity, with the most notable exception being Argentina in recent times. But as you said, this just highlights the concern that should the war drag on, it might put added pressure on the regional countries.
And of course, I should just emphasize that as per Wall Street Journal reporting. Onur, thank you so much. Onur Ant, Bloomberg's managing editor for the Middle East and North Africa. Well, futures on both sides of the Atlantic falling on those renewed Iran tensions. Let's bring in Bloomberg MLife strategist David Savage. So we were just talking about the momentum behind crude futures today, once again higher. So is this going to slow down the rally we've seen in equities the last few weeks?
Yeah, I mean, it's as you noted, it's somewhat just reversing some of the losses we saw in the U.S. session on Friday. And again, I'd say the reaction from equity markets has been fairly muted. In Asian equities, we're higher pretty much across the board, particularly Asian tech stocks. And the Nasdaq is down 0.5%. And the context here is, of course, the Nasdaq 100 index has been rising for 13 consecutive days. That's the longest streak going back to 2013. So at this stage, geopolitical headlines from around the Iran conflict doesn't seem to elicit the same type of response from risk assets. And I think as long as equity investors see that there's progress towards some sort of negotiated settlement, I think they're going to continue to focus on earnings, and that's where there's obviously a lot of optimism, particularly around tech stocks. And so I think as long as investors believe there's not going to be further escalation, focus is going to be oriented elsewhere.
Bloomberg MLife strategist David Savage, thank you so much for the overview. Well, a different picture in Asia, I've got to say, this morning. The handover pretty positive there. Let's see how markets are faring with Winnie Su in Hong Kong. What's been driving the gains today, Winnie?
Yeah, morning, Jumana. Indeed, very different picture in Asia. As you can see that actually major benchmarks here are all in the green. And investors are telling us that at this point, they're pretty happy to look past developments over the weekend and instead focus on those positive talks to come between the U.S. and Iran, as well as David just mentioned, fundamentals and earnings. And in fact, also worth pointing out that trading volume remains quite muted in Asia today. And that goes to show how investors still lack that conviction when it comes to which sides to bet. But on the screen, you can see that the MSCI Emerging Markets Index erased all losses since the war began. And with that, you flip the board and take a look at how South Korea's Kospi Index also erasing those losses. And on a one-year basis, we're still looking at 150% jump, making it the best performing stock gauge globally. And that is still driven by those optimism in AI. Those were reinforced by the latest earnings from Samsung, from TSMC, and we will be then very closely watching out for SK Hynix earnings later this week. And you also flip a board and take a look at the currency market, because that is slightly less rosy compared to equities because of the slightly strength that we're seeing in the US dollar. Korean won here leading losses, weakening by about 1%, and it is the worst intraday losses that it saw since about a month ago. Back to you, Jumana.
Winnie, thank you so much. Well, over here, I should say over in Europe, one of the big stories in the banking space has been The whole story around the consolidation, potential consolidation of Commerzbank with UniCredit. And today we're getting some more commentary from UniCredit. They are outlining their approach to value creation for Commerzbank. They say they see significant upside for Commerzbank and that the bank is insufficiently prepared for challenges. They add that they forecast around 45 billion in a net revenue in 2030 from the Commerzbank combination. And of course, the background to all of this is UniCredit currently owns around 30% of Commerzbank. And the ECB are currently assessing whether UniCredit would have effective control of Commerzbank once its holding exceeds that 30% level, because if it does, then it could trigger more onerous capital treatment requirements. So this is ongoing conversations, and you can see quite clearly that UniCredit are spelling out even more, perhaps giving a little bit more detail, the thinking and the rationale behind them wanting to increase their stake in Commerzbank. All right, still ahead, Prime Minister Keir Starmer prepares to make a statement to the UK Parliament as the row continues over the security vetting of the former ambassador, Peter Mandelson. But first, we return to the Middle East to discuss the challenges to the fragile 10-day ceasefire between Israel and Lebanon. That's next. This is Bloomberg.
I'm very worried also about the ceasefire that was agreed between Israel and Lebanon at the coordination of the United States and President Trump. It all seems very fragile, and it all seems to be a day-to-day situation, whereas what we need is a much longer perspective and genuine diplomatic efforts that will lead to something that is actually sustainable.
EU Special Representative for Human Rights, Kassa Alangren. Now, Israel's defense minister says the country's military has been instructed to use full force in Lebanon if troops face any threat, even during the current ceasefire. Bloomberg's Dan Williams joins us now from Jerusalem. Well, technically, the ceasefire went into effect on Friday morning, Dan. What is the status today? Because there were a few developments over the weekend.
Correct, Jemana. Went into effect on Friday. That means there is about 7 days remaining on the clock of this 10-day ceasefire. Like any ceasefire, this is self-interested, it's cold-eyed, and it's temporary. It's not peace. It's a long way from peace. If anything, it just freezes the situation as it was with Israeli forces in southern Lebanon, digging down into what they're describing as a buffer zone. Keep in mind that that area was largely depopulated. What Israel says was an effort to get civilians out of the way of its fighting with Hezbollah. Lebanese wondering if that depopulation, hundreds of thousands of residents, could prove long-term. Now, according to Israel, not just according to Israel, according to the United States, which brokered this deal between Israel and Lebanon, a deal to which Hezbollah is not a party, there is a provision, Clause 3 of the deal, a use of force provision allowing Israel to basically use its military against perceived or imminent threats posed by Hezbollah. Israel is definitely using that. And over the weekend, not only were there lethal strikes by the Israelis against what they called Hezbollah threats, there are also 2 Israeli soldiers killed by booby-trap bombs apparently left by Hezbollah in southern Lebanon in advance of the ceasefire. So not actively activated by Hezbollah in some form of an ambush, effectively detonated by accident by Israelis as they continued with their search operations and with their operations to clear that buffer zone.
And what has been the reaction in Israel to the 2 ceasefires that have now gone into effect, the one with Lebanon and also the broader discussions around the regional ceasefire as we head into what could be a crucial week of negotiations between U.S. and Iran?
That's an excellent question. There's evident relief among Israelis. This just wasn't a 40-day war, a multi-week war with Iran. For Israelis and for others in the region, it was the cresting of 2.5 years of war that began in Gaza with that October 7th attack in 2023. There's exhaustion across the board here, certainly within Israel. And the Israelis were very quick to dismantle some of their precautionary measures put in place during this recent war. For example, the assembling of security squads for northern communities, rules against congregating in public. And that's in advance of this week's commemorations, Memorial Day for Fallen Soldiers, which begins this evening, runs into tomorrow evening, and is followed back to back by Independence Day. So a solemn day followed by a day of celebration. However, both days will be muted, will be clouded by uncertainty over what the immediate future holds. As always, Israel is the junior partner in this war in concert with the United States against Iran. The United States, President Trump, do call the shots. The Israelis say that they're being updated regularly by the Americans, so do the Americans for that matter. But I think it's no secret that they don't have a seat at the negotiating table in Pakistan. If negotiations do resume there tomorrow, Israel has no direct engagement with Iran or with Pakistan for that matter. So effectively, the United States is leading the fray, both in terms of war making and potential peacemaking. The Israelis remain on a war footing. Yeah. They're very used to this. They're ready to go back to war. I think they're hoping there will be a resolution.
Bloomberg's Dan Williams, thank you so much. Well, coming up, growing concern for Germany's economic output as Chancellor Friedrich Merz plans talks on the global energy crisis. Details next. This is Bloomberg. Welcome back to the show. Now to some of the other top stories we're following this morning. It's reported that Chancellor Rachel Reeves will meet executives from the largest UK banks on Wednesday as the ongoing Iran crisis weighs on Britain's economy. According to Sky News, Reeves is set to raise the bank's ongoing commitment to supporting customers affected by inflationary pressures arising from the war in the Middle East. Chancellor Friedrich Merz plans to convene Germany's National Security Council to discuss the global energy crisis, signaling increased concern about its impact on Europe's biggest economy. Merz says the council is empowered to take immediate action to ensure Germany's energy security is needed and that the government is prepared with measures should the situation escalate. And North Korea says it has tested a variant of its flagship Hwasong-11 ballistic missile in a launch hailed by leader Kim Jong-un. State media says 5 missiles launched on Sunday hit their target area around an island about 140 kilometers away with high precision. North Korea routinely tests ballistic missiles, citing what it calls U.S. and South Korean threats to topple its leadership. And speaking of geopolitics, let's take a look at how some of these key commodity indicators are faring this morning, given all of the news around the Strait of Hormuz over the weekend. A real deadlock there. The blockades is still going on. And we woke up this morning to news that U.S. Central Command have actually seized an Iranian-linked vessel. On the back of that, Brent is up almost 6% today in trading, $95, up from a low of close to around $86 on Friday. And then we've got WTI still trading, of course, at a discount to Brent, just shy of $90 here, but still up 6.2% today. European gas markets also shooting higher this morning, up 7% today in trading. And coming up, after this first seizure in the U.S. blockade of the Strait of Hormuz, Iran has stopped traffic through the waterway less than 24 hours after saying ships could pass. More on what exactly is going on around the strait next. This is Bloomberg. Good morning. Live from Dubai today, this is Bloomberg Daybreak Europe. I'm Joanna Bersecci with your top stories. Oil and gas surge while stock futures fall as U.S.-Iran tensions escalate and the standoff in the Strait of Hormuz continues. The U.S. Navy boards an Iranian-flagged cargo ship with the key waterway remaining shut. Iran unveils a new transit fee. Diplomacy on the brink. Iran says it will not join peace talks until the U.S. blockade is lifted. Meanwhile, President Trump dispatches negotiators to Pakistan ahead of tomorrow's ceasefire deadline. And a check on your markets as we head into what will be quite a big week globally, not just geopolitically as it pertains to those potential talks between U.S. and Iran and Islamabad, the state of the Strait, but then also a lot of earnings coming through for European equities. And we continue with U.S. earnings seasons as well. So a lot to watch out for. S&P futures, though, starting the week off on negative footing, down about 0.7%. European markets continue to drift lower in early hours of trading, down 1.4% already. And really some concern there about the possibility of a breakdown of a diplomatic breakthrough or potential negotiations between U.S. and Iran and the knock-on effects that that's having on commodity markets this morning. FTSE 100, the relative outperformer, down 0.5%. But switching over, let's talk about the reaction of commodity markets because Brent is soaring once again today. We are back up at around a $95 handle. 95.50 is where we're at, 5.6% higher. At one point on Friday, we got to as low as around $86 a barrel. We were down about 12% before recuperating some of those losses when it became apparent that the Strait was not open for business. European gas futures also continue to move higher as we pick up momentum in the early hours of Europe, up 7.2% today, and then U.S. nat gas also up 1.8% as well today in trading. Now, time for your front page news. The Wall Street Journal leading on big oil plying billions into far-flung drilling sites to escape Iran turmoil. The paper adding that Exxon, Chevron and others are turning to Africa and South America for the next generation of prospects. Meanwhile, the Financial Times splashes on UK Prime Minister Keir Starmer battling for his future amid the Peter Mandelson vetting scandal. And likewise, the Times also leads on Mandelson. The paper says the former British ambassador to the U.S. was privy to information that, if leaked, would present a security risk despite failing vetting. And you can get a roundup of the stories you need to know to get your day going in today's edition of Daybreak. Terminal subscribers can go to DAYB Go on the terminal. Let's go back to what's been happening in global markets and energy prices, which have jumped amid escalating confusion and confrontation in the Strait of Hormuz. Conflicting signals from Iranian and U.S. officials triggered a chaotic 24-hour period. An estimated 135 million barrels of crude and refined products remain stranded on tankers in the Persian Gulf. For more, I'm joined by Clara Ferrer-Marquez, Bloomberg's managing editor for commodities and energy. Well, maybe, Clara, just walk us through all of the events over the weekend, because a lot went down and it was pretty dramatic.
Indeed. What a difference a weekend makes. So obviously we ended Friday on this note of optimism, with both sides saying the Strait was open, and we had a day of activity on Saturday where it seemed like ship owners were gathering the confidence to start to move vessels through, and all of that changed. Everyone pretty much has U-turned, with the exception of a few that just managed to make their way through within that window of opportunity. And by Sunday, we had Trump making threats again and virtually no traffic. And that is how we are still this morning. Virtually no traffic making its way through the narrow waterway. We do have a couple of shadow fleet vessels on the edges, but effectively it is at a standstill today.
And let me just ask you, what the reaction has been from ship owners to all of this mixed messaging that has come through over the course of the weekend. Because as you say, some vessels attempted to make the journey, but then had to change their mind. What clarity are they waiting for?
I mean, at this point, they would like to see some guarantee of their safety from either side. They're now facing two blockades, so they have to satisfy Iranian authorities, whereas you mentioned earlier, the rules are changing again. And then they have to satisfy a US blockade. So it is really becoming very, very challenging. Of course, a lot of these ship owners have been waiting a very long time, but they do need to protect their cargoes, their crew, their vessels. So we are seeing a huge amount of hesitation and very little movement as a result. I mean, they will need to see a lot more to start moving.
Clara Ferrer-Marquez, Bloomberg's managing editor for commodities and energy, thank you so much for joining us today. Well, former Bulgarian President Rumen Radev, who opposes sanctions against Russia and military aid for Ukraine, is on track to win the country's 8th general election since 2021. Radev, who now has a chance to end years of political deadlock, says he plans to improve relations with Moscow.
I hope that we will develop practical relations with Russia based on mutual respect and equal treatment. This is our approach to Russia.
Let's bring in Bloomberg's chief Europe correspondent, Oliver Crook. Well, it feels like a pretty significant election result for Bulgaria and, of course, for the EU as well, especially given the appetite here to actually forge closer relations with Russia.
That's right, Jumana. I mean, it's an election that's watched very closely. I mean, all the elections are watched very closely these days from here in Brussels, but it's one that was really driven by the sort of domestic issues within Bulgaria, you know, the 8th election within 5 years. And the good sign from this election is at least for one of political stability. It's an outcome that is fairly decisive. Rumen Radev seems to be carrying away the sort of majority there to be able to form a stable government after months of protest, after years of political deadlock. So from that perspective, certainly a sort of welcoming sign, perhaps a little bit less welcoming here in Brussels are some of this commentary vis-a-vis Russia and the Kremlin. That being said, I think we're tempted to make a lot of analogies between Bulgaria and Hungary, particularly with Viktor Orban having been voted out, someone who's been very, very pro-Kremlin, and now Radev being sort of brought in. I think that his approach is going to be much more pragmatic, much less confrontational when it comes to the European Union. He did say he wants a more practical relationship with the Russians, but he also said he wants to make every effort to continue Bulgaria on its European path, a European path for Bulgaria that began back in 2007 when they joined the EU and sort of continued this year when they joined the Eurozone, though Radev himself had actually campaigned against joining the Euro. But again, I think a much more practical figure than what we're used to in the form of Viktor Orban here going forward in Bulgaria.
Yeah, okay, so let's talk about last week's Hungarian election. What progress has there been on Hungary approving that EU funding for Ukraine now?
So it looks like that could actually potentially be approved this week. So this is something that could actually be approved under Viktor Orban if his outgoing government. We're still waiting for the Magyar government to be fully assembled. That is likely to take hold at some point in the month of May. That being said, the sort of holdup, the reason that Orban gave for blocking that 90 billion euro loan to the Ukrainians was that damaged pipeline that was carrying crude oil from Russia through Ukraine to Hungary. It was damaged. Orban was accusing the Ukrainians basically of not fixing it. It now seems that oil will now be flowing back into Hungary. And so as a consequence, you could have actually Orban himself lifting that veto. And that is just sort of one side of things that is obviously extremely important to the Ukrainians. Zelensky has called it a matter of survival to get that money in order to keep the nation solvent, both militarily, but also for its budget. But there are other issues for Magyar and the Hungarians. They're also trying to unlock some of those EU funds. There are 20 billion euros of the EU funds that have been stuck on the sidelines because of some of the anti-democratic proposals that Orban has put into power. Magyar wants to unlock those, and some of that money will expire by August. And that is something that we understand this weekend. We had European officials over in Budapest to talk about it with Peter Magyar. We also understand that his third destination to visit will be Brussels sometimes next month to try to get the ball rolling to unlock some of that money. And we should say, Jumana, that 20 billion euros sitting on the sideline, that's a lot of money for Hungary. That's almost 7% of the economy. So really going to be a priority for Magyar to unlock that money.
Bloomberg's chief Europe correspondent, Oliver Crook, thank you so much. Well, Keir Starmer is preparing for a showdown with the senior official he sacked over the appointment of Peter Mandelson as U.S. ambassador. The UK Prime Minister will make a statement to Parliament today to address a fresh row over Mandelson's security vetting clearance. Bloomberg opinion columnist Rosa Prince is with us. So, just bring us up to speed on what happened over the weekend. Clearly, the Prime Minister is coming under a lot of pressure right now.
Yes, he certainly does. And this really seems to have come down to quite a tussle between the political side of the UK government and the official side, the civil servants, the unelected figures behind the scenes who kind of keep the wheels of government moving. Now, last week, when it emerged that the Prime Minister and his team of ministers had not been aware that Peter Mandelson had failed official vetting before he was appointed to become UK ambassador to the United States, when that emerged, the Prime Minister said he was furious and he fired the head of the civil service side of the Foreign Office, who actually made that decision and allowed Peter Mandelson to proceed with the appointment, even though he had failed that vetting. Over the weekend, lots of fight back from friends of Ollie Robbins, that civil servant, saying, look, he was just doing his job. This is how vetting works. It's not normal to tell the politicians what's happened here. This is a confidential process. What's going to transpire over the next couple of days is that first the Prime Minister this afternoon will go to the House of Commons and give his version of events, and then we'll hear from Ollie Robbins what he thinks. That'll happen on Tuesday in front of one of these powerful committees of Parliament. So really looking forward to hearing exactly what the two men say.
Yeah, so you've walked us through what we can expect the next couple of days. Could this be a turning point for the Prime Minister as a result of the next 2 days of proceedings?
Well, there's been lots of pressure on the Prime Minister from opposition politicians who are calling for him to stand down. They are saying that he has misled the House of Commons because he repeatedly said that Peter Mandelson effectively said that he did get security clearance. Less noise from his own side, and that's key because it is Labour MPs who will have to really pull the trigger if they are to try to get Keir Starmer out. They have proved over the last couple of months that they are kind of unwilling to do that. And I think that's not because they're happy with his leadership. Indeed, all the signs are that they're really unhappy with him. He's a very unpopular Prime Minister. It looks like he will be leading them to a big defeat in big local elections that are coming next month. But they really just cannot agree on who they want to replace him. So he's kind of there by default. And it seems like that scenario that we've had for the last few months will continue, even though this is a very uncomfortable situation for him and his party.
Bloomberg opinion columnist Rosa Prince, thank you so much for bringing us the latest there. Well, coming up, we'll discuss bumper week for earnings from some European heavyweights. All the details next. This is Bloomberg. Welcome back to Bloomberg Daybreak Europe. Well, now to some corporate news that we're following this morning. According to a poll of executives, artificial intelligence is increasingly expected to lower Britain's level of employment during the next decade, with entry-level roles bearing the brunt. The Accenture research shows around half of business leaders fear net job losses across the economy, up from a third when the survey took place 2 years ago. Meta Platforms is reportedly planning to lay off around 10% of its global workforce in late May. Reuters cites anonymous sources saying the company is also planning further cuts in the second half of the year. The move could help Meta offset some of its massive investments in AI infrastructure, mirroring broader tech sector trends. And Google is reportedly in talks with Marvell Technology to develop 2 new custom AI chips. According to the information, one of them is a memory processing unit, while the other would be specifically built for running AI models. The report says discussions are focused on chips designed exclusively for Google. And Bloomberg has learned that the world's top energy trader, Vitol Group, has told banks it made first quarter profit of around $2 billion. Vitol has been trying to reassure banks following a Bloomberg report that it was reorganizing its derivatives team, which suffered losses from early war-related price swings. Sources say the figure could still change as the company finalizes its accounts for the period. And Europe's earnings season is in full swing. This week brings several key releases that will offer a vital health check on the region's consumer resilience. Joining us now from London is Chloe Millet, our EMEA stocks reporter. Loads to get through. Let's just start with maybe some of the consumer goods companies. Danone, Nestle, they're both facing infant formula recalls, mounting inflation. What are you expecting this week?
Yeah, it could be quite challenging first quarter report for Nestle and Danone. And as you say, they both are facing those infant formula recalls that we've been talking about for a few months now, but that could really dent those first quarter sales for those two companies. And then more broadly for consumer names that include those two, but also Reckitt and L'Oreal, there's also those growing inflationary pressures and this weak consumer sentiment. And so for those companies, the focus is really going to be on whether they're able to maintain volumes and really strike the right right balance between pricing and volume, because shoppers are really increasingly looking for value. And so we could be seeing quite a weak quarter for Danone and Nestle, maybe some sales misses, and maybe also potentially some revised guidance as they kind of try and figure out what the impact is going to be for the rest of 2026.
Yeah, Chloe, and in the last couple of weeks, we've seen the AI trade make a bit of a comeback. You've got some key tech earnings coming through this week from the likes of SAP, ASM, B, Semiconductor. What are we looking for there, and how is it going to reflect the overall European tech industry?
Yeah, absolutely. So we have SAP, of course, a very important name, and there could be a bit of a weak quarter as well. So, of course, in the same way that consumer confidence has been impacted by the war, business confidence has as well. And so that could potentially impact this business spend on software. So that could be potentially a bit of a hit for SAP. And there's also, of course, the continued question around AI disruption. We had this software sell-off earlier in the year that is still relevant. That is still something that investors are going to be asking about. So that will be really key for SAP. And then for the likes of BE Semi and ASM, we could see those two really continue in the footsteps of ASML that we had last week, and really benefiting from this investment cycle in AI, but also in that investment in semiconductors broadening actually beyond AI. And for example, we also have ST Micro that could benefit from things outside of this artificial intelligence investment, and benefiting, for example, from satellite communications and that exposure to that market. So there's a lot of different things here, but AI is obviously going to be really the focus.
Yeah, and to round things up, I can't not ask you about European banks. We had U.S. banks reporting last week. The takeaway was pretty robust, save for, a couple of divisions, but overall, profit was pretty robust for many of these U.S. banks. What is the read across to European banks? I know this week we have Nordea and Handelsbanken reporting.
Yeah, so we have got those Nordic banks starting off, and the focus is really going to be on net interest income. And so whether there's the prospect of higher interest rates maybe offsets the prospect of lower loan demand because of weak consumer confidence. So that is going to be really in focus. But then also kind of reading across from the US, we're going to have to think about also the trading income for those investment banks that report then next week, and then also maybe any increase in provisions to account for this weaker consumer and business confidence. So those are the things that we'll be watching out for in the banking sector.
Bloomberg's Chloe Millet, thank you so much. Very comprehensive overview of what to watch out for this week in European earnings. Well, Blue Origin's New Glenn rocket has completed its third flight, reusing a booster for the first time. But the mission failed to correctly place a satellite in its intended orbit. Blue Origin CEO Dave Limp told Bloomberg exclusively that he sees more New Glenn flights in 2026.
I think it'd be a really good year if we could do, 8 to 12 flights this year, up from 2 last year. That would be, that'd be a good cadence for us. I can see a path that we have plenty of hardware to do that. It really is what we learn from the flights. I would tell you that there's never been a time where launch is in such demand. And by the way, I think the demand's going up.
Okay, well, we've given a bit of an earnings preview for this week, but I do want to go back to geopolitical financial indicators and the fact that this morning we are seeing commodities bounce. So Brent is up 5.5% at $95. At one point on Friday, we got as low as 86, but a lot of that has been priced out now. So again, some buildup and uplift in the price of oil and in gas futures as well. You can see European gas futures also up 7.4% this morning. Traders, they're really focused on the ongoing disruption still around the Strait of Hormuz, the fact that not only has there been a deterioration of events, but also an actual seizure of an Iranian-linked vessel by CENTCOM over the last 24 hours. So some real questions also about whether this is going to have knock-on effects for those potential upcoming Islamabad discussions between Iran and U.S. officials. So that is on traders' minds this morning. Plenty more coming up. This is Bloomberg.
I don't know. That could happen later this year. That might not happen till next year. But prices have likely peaked and they'll start going down. Certainly with a resolution of this conflict, you'll see prices go down. Prices across the board on energy prices will go down.
That was the U.S. Energy Secretary Chris Wright there talking about the potential for prices to move lower, of course, if there is a resolution. But I do just want to point out that actually, if you look at the wedge between WTI and Brent, it still suggests, lingering extra premium being priced into Brent. Obviously, given the strait is still effectively shut. Now that premium is around $7.50. Typically, before the war, it traded in a 3 to 4 handle. We got as high as 12, but still, the premium is still there. So worth noting. The other thing I want to show you, too, is we have seen so much volatility in oil markets, and that is not being reflected in U.S. Treasuries. And perhaps something to think about down the track is perhaps, U.S. Treasuries are being a little bit too complacent about the possibility of some of this oil volatility creeping into fixed income markets at some point later in the year. So keep an eye on that as well. And then finally, away from the war, this is an interesting phenomenon. And even before the war started, we were talking about the disruption that was taking place in many of these software names, software stocks on back of a potential AI upending the business model of many of these companies. But actually what has happened is software has had a great week last week. And that is namely because some AI companies are actually throttling or withholding some of their compute power, which sort of raises questions about how far the disruption can actually go with some of these software businesses. So it's been actually a good week for software. And those are some of the charts that we're watching out for. Of course, we're going to keep a close eye on those geopolitical developments, whether the Islamabad talks go ahead and U.S. and European earnings season for the rest of this week. But that is it for Daybreak Europe. Stay with us because the opening trade is coming up next. This is Bloomberg.